In contrast to other pharma industries present in the market, this specific company focuses more on the dental products only. So there are very few competitors who are focusing majorly on this, if considered on an international scale. But on national scale, there are almost no competitors. Like I'll broadly elaborate on that point later. So let us look at the history. Prevest Denpro was established in 1999 with a handful of workforce and few products for dental applications. And it operates on modern state-of-art factory in Jammu Kashmir. And it has also established a state-of-art learning and training center for dental courses and continuing professional education. It has also received certain awards and accolades, it has received National Oral Healthcare Shushta Award for Best Dental Manufacturer. It has also received Top Exporter Award. Around 60% of the revenue of the company comes from exports, and around 40% is incurred from national based sales and revenue. So, owing to its larger exports, it has received the Top Exporter Award as well, and is recognized as a star exporter house. So, getting to know our business a little better, we can state that it was incorporated in 2000, and it focuses on manufacturing of dental materials used for diagnosis, prevention, and treatment of dental conditions. These are certain SKUs that the company is currently working on, clinical products and laboratory products. And these are the descriptions of those materials and those products that the company is currently manufacturing. And this broadly entitles the entire field of focus of the company and the field of dentistry that the company is focusing upon. It focuses on endodontics, prosthodontics, orthodontics, and etc. And these are primarily I just searched through Google, and these are the most prominent and the most demanding sectors of uh, dentistry. Therefore, this company is a major contributor to that. It has a manufacturing unit in Jammu and Kashmir, as it was elaborated earlier as well. Now, let us look at the shareholding pattern. If you look at the shareholding pattern, we broadly observe that post September 2021, there has been a drastic decline in FIIs and DIIs. This is not a red signal, and it is, of course, due to listing of an IPO in September 2021, which was considered a huge hit for this company. It was subscribed 38.12 times, and it opened at a premium of 114.94% on the first day of trading. The price band that the company sought after was around 82 to 84 rupees per share, while the listing price was around 180 to 189 rupees per share, which was really a huge success for the company, as well as for the investors who uh, did want to invest in the company or did got the IPO allocation. Post the IPO allocation, the company also gave a bonus to each of its shareholders in the ratio of 30 is to 1 at the cost of rupees 10 each, and around 85.5 lakhs shares were distributed among the shareholders post IPO allocation. The remaining, during the bonus issue of the company was seeking to allot these many shares, like 1 lakh 17 sorry, 1 crore 17 lakh 18,000 shares, and it did allot 85 lakhs 50,000 shares as bonus, and the remaining shares were uh, given out to the investors in the form of an FPO. Uh, so this was broadly whatever shareholding the company does hold in the current state of time. After that, let us look at the geographical distribution of the sales and revenue. The company broadly obtains 60% of its revenue from international sales, and they are distributed as Asia contributes to around 54%, Middle East around 18%, Europe 12%, Africa 5%, and all other countries around 11%. So the products are sold in almost 75 plus countries around the world. According to FY23 quarter one of FY23 data, the distribution network of the company is also quite strong. It operates both B2B and D2C. It operates in both B2B and D2C models. In B2B models, it does go to certain dental institutions and medical, uh, where it does send some uh, like sales and marketing professionals in order to market its own products. And it also does directly go to customers in the form of its online portal, through government portals like GM portals, and through third party like Amazon portals as well. Like mostly the business that is incurred by the company is through D2D only. Like the company does deal with the dealers and distributors only, and has no kind of negotiation with the consumers. The company has also made up some strategic tie-ups with 8 reputed dental universities and institutions, which does confirm the validity of its products, and does confirm the quality of the products that the company is manufacturing. It also entered a technology transfer agreement with C. Chitra Trinural Institute of Medical Sciences and Technology on how to manufacture bioactive bone cement based on calcium sulfate. This is a really hot topic of research in dentistry right now, and the company is also trying to solve upon this problem, which is it's a really good thing for the R&D of the company, as if they do solve such kinds of problems, they would be easily able to level up their market share in India as well as abroad. Coming to the board of directors, Mr. Atul Modi, chairman, is a chairman and managing director of the company. He also has previous experiences in the field of industrial chemicals, and this showcases his expertise in the chemical industry. So he was a sole founder of Prevest Denpro Limited, and surely his vision and mission are being accomplished by the company and the management. Mrs. Narmada Modi is the full-time director CFO of the company. She is a dedicated entrepreneur and mostly looks after the self-reliance and skill development initiatives that are initiated by the company. Mr. Vaibhav Munjal is the CMO of the company, and he broadly looks after the management perspectives that are uh, that are operated by the company. And we have broadly 4 independent directors from various fields, which is really essential for any and every company, as they look after the most essential perspectives of the company and the most essential grounds that the company operates on, like Dr. Nikhil Shrikant Bobade and Dr. Sandeep Haralgatte Murthy are independent directors who belong to dentistry and are specifically dentists. So they would look after the customer satisfaction and the quality of the materials that the company is producing. As a dentist perspective, is the extremely important marketing initiative that the company needs to take care of in order to increase its revenue. Mrs. Niharika Modi has completed Bachelor in Technology in CSE. So basically, she is kind of an IT guy. So she would be looking after the sales that happen in e-commerce platforms, as well as other kinds of sales in third-party websites like Amazon and GM portals. And CA Pradeep Gandotra is also an independent director who looks after the finances and the financial stability of the company. He has also experienced a really successful career and has also been nominated by the Reserve Bank of India as the director of board of Jammu Kashmir Bank Limited. So this was broadly everything about the board of directors. Mostly the board of directors have not been changed over time, and the company has been booking quite handsome profits since I can say since the last 5 years. So there is no greater question or greater remark on these directors that come into play. Like we can easily trust on them because the company has been showcasing wonderful results from the past 5 years. Now, looking at the financial analysis, the market capitalization of the company is 509 crores, which shows that this is a small cap industry, a small cap company. So now, looking at other ratios as well, we spot that the stock P is around 32.4, while the industrial P is around 33.4. This shows that the stock is broadly not overvalued. Moreover, if we see the charts on screener as well, we find that the stock is dangling around its median PE as well, which shows that the stock is not at all overvalued. The return on equity that has been observed in the past year is 24.2, and the quick ratio of the company is 9.10, which is also really great because the company is able to stockpile its assets and will be able to pay off its liabilities, as this ratio is far greater than 1. The debt to equity ratio of the company is 0, and the debt of the company is also 0, which also is an extremely important factor for any and every company to have, that is to minimize its debts. And having a zero debt is an awesome standpoint for any company and extremely great attractive point for any investor to invest in the company. There is a little flaw that the company does not give any kind of dividend to its investors, but this cannot be attributed as a negative point for the company. Now let us look at some of the insights that have been obtained from this table as well as from certain analysis from Screener. The PE ratio is of course less than the industry PE ratio, which implies that the company is not overvalued. The company has excellent values of quick and current ratios, so it shows that it has enough assets to pay off its liabilities. The company is operating at almost zero debt, uh, which is an extremely positive signal for company's growth. Now, the income statement of the company is also quite appreciable, as the company has been booking profits and generating revenues with continuous and consistent rate. So, if we analyze the income statement of the company, we observe that the EBIT, profit before tax, profit after tax, all of these values have been rising consistently, which is an extremely positive point when looked at the operations view of the company, because the company is able to efficiently manage its resources and book profits. Now, although the company has been booking continuous profits, most of the profits are invested currently, like in the current quarter, most of the profits are getting invested in expansion of inventory and incursion of more number of vehicles and transportation elements in the company, because the company is seeking to build up another manufacturing unit. So optimizing the transportation unit would be a really essential part for the company. We will like I'll elaborate a little more about this part a little later. The company has not been paying dividends, of course, to its investors. The cash conversion cycle, like the company is not able to convert its resources efficiently into cash in a limited number of days. Like the cash conversion cycle of the company is around 140 days, and the debtor days, days payable, and inventory turnover have seen a significant rise since the past quarterly results. This is a negative point for the company because the cash flows have slowed down for the company as of now. The working capital days of the company is also quite high, and we have also seen a decline in the EPS, ROE, and ROC of the company in the past, not exactly 2 years, in the exact in past 2 quarters. Now let us see why is that. Uh, uh, why did the ROCE and ROE of the company decline? Now we find that the sales and the profit growth have been continuously rising. Now ROE and ROCE have been declining because most of the profits that has been booked by the company is getting invested back into the company, because the company has been buying inventories, has been buying transportation vehicles, and has been investing in its fixed assets. Now, because of these investments, the return that the investors and the stakeholders expect would be quite less, because effective contribution of the profit to the investors would be less, because of which there has been a decline in ROE and ROCE. Now, if we analyze some more ratios, if we see that the CFO by PAT ratio is less than 1, which is a great sign, because profit after tax has been increasing, and this ratio being less than 1 shows that the profit has been increasing more than the cash flow, which shows that at the current state, the cash flow might not be enough to support the investors, but certainly once the business gets stabilized, the profit would be able to satisfy the investor needs. The interest coverage ratio is 60.34, which shows that the EBIT of the company is large enough to pay off its interests. The price to cash flow ratio is quite high. Now, this is a kind of a red signal, because for 1 unit of cash flow into the company, we are paying an effective of 73.18 rupees, which is a really an alarming thing, because for 1 rupees, we are paying almost 70 times the amount. Now, the company has to manifest its operations, has to optimize its operations in order to bring down this value in the near future, which I believe, of course, the management of the company is strong enough to do. Now let us look at the peer comparison of the company. Now, broadly speaking, this is the market share of India's dentistry market and like India's dental market, and these are the companies who have been the top contributors. So among these, just Prevest Denpro is an Indian company, and all other companies are based outside. So comparing this company with international companies will not make that much of a sense, like because most of these international companies are broad pharmaceutical companies and they do not focus only on dentistry. Firstly, and most of these companies are large cap companies, while Previs Denpro is a small cap company. So even if Previs Denpro increases its market share by 1% now, there will be a huge increment in its market price, and even the ROE and ROC of the company will rise. So comparison with these competitors won't seem valid. Another competitor which also lies along the margin with Prevest Denpro is 3M India. So 3M India is a pharmaceutical company which broadly focuses on all sectors of pharmaceutical industry. So let us make the analysis between 3M India and Prevest Denpro. We clearly see that the P ratio of Prevest Denpro is less than 3M India, which shows that Prevest Denpro is more validated or more along its correct valuation than 3M India. Debt to equity ratio of Prevest Denpro is of course lower than 3M India, which is again a positive signal. ROE and ROIC of Prevest Denpro is of course greater than 3M India, is again a positive signal. Current ratio is again greater than 3M India, which is again a positive signal. Now, the one thing that Prevest Pro lacks here is the profit growth. Now, why is there a huge difference between these two numbers? Is because 3M India sorts after seeking profits from other pharmaceutical products as well, and dental products is just one of them. While for Prevest Denpro, the dental products is the prime focus or the prime investment or the prime revenue seeking product that it needs to focus on. So currently the profit growth of 3M India is comparatively larger than Prevest Denpro. Now let us look at what the future looks like for Prevest Denpro, considering the manufacturing and uh, other qualitative views. So Prevest Denpro is currently focusing on setting up another manufacturing facility, which would be around 16,000 plus square feet. And it is a new manufacturing line which will focus on other new SKUs. Now, why is Prevest True looking towards other SKUs is that its management board has ensured that the newer SKUs would ensure around 40% more profit margin than the current SKUs. So establishment of such industry would be really profitable and beneficial for the company. The facility is proposed to be commissioned in quarter three of FY23, and the project is over 25 crores. The company has also marked certain footprints, and it has obtained US FDA approval of 20 dental products and MDSAP certification. Now, these are essential because these certifications would be required for the company to market and sell its products in USA, Canada, and Brazil. So, having done this, the company can also optimize its exports as well as reach out to the international market in a better manner. Now, let us look at some of the future projections. So, according to the reports of the management, the company is seeking to increase its market share to 4% in the Indian domestic market, which now ranges to around 2% based on the Indian market share. So currently, the company is earning around 20 crores. So when this would translate to 4%, the company would earn around 40 crores on the domestic perspective only. And the company is also planning to plant new products in the newer manufacturing plant, and on them it can obtain an effective margin of 40%. So, maintaining the conservative view of the company, the management says that it would be able to book sales around 67 to 68 crores this year. So let us say, and of course, the management will overestimate its share so that it does gain the trust of the shareholders further. So let us estimate that the current sales that is expected this year would be around 64 crores. The expenses would rise simultaneously, so we can like futurize and predict the expenses to be around 43 crores. So the operating profit would be this much. And on similar lines, we can project the other income, depreciation, interest, and evaluate profit before tax. Now, the net profit that the company books finally is 16.85 crores. Is of course greater than 15.71 crores that has been booked in FY20 in the previous year. So basically, the net profit has risen from 15.71 to 16.85. Correspondingly, we can also calculate the EPS and price to earning ratio for the company. And with the help of these parameters, we can expect that by end of FY24, the company's market capitalization would be around 527.3 crores, while the current market capitalization is around 506.89 crores, which is again quite a good rise for the company. Now, let us look at some of the risks that the company has to handle and some of the problems and flaws the company has published in its balance sheets and reports. First of all, companies like Dentsply Sirona and 3M India are again 3M India has also its manufacturing units outside, as well as it imports and assembles the dental products that has been imported from China and all. So basically, these companies do not have a manufacturing house in India itself. So Prevest Denpro is seeking that since they have a manufacturing unit in India, they would be able to book profits more efficiently. But this has not been proven to be true yet because the market shares of Dentsply Sirona is significantly higher than Prevest Denpro. So the management still has to prove out its point that it can secure a greater position that has been occupied by these two companies. Apart from that, the other foreign competitors in this industry of manufacturing have acquired significant shares in India. So Prevest Pro has to mark out a way to tackle these competitors in order to be a prime player in this market. Now, in this quarter specifically, Prevest Denpro has compromised on ROE, ROC, and EPS of investors and has been investing in fixed assets. So, the management has to now prove that this investment is fruitful and thereby come back by the end of FY24 or maybe in the next quarter with a greater value of ROE, ROC, and EPS so that the investors remain satisfied and keep their investments in the company. Uh, Apart from that, let us look at some of the flaws that have been noticed in the balance sheet and income statement of the company. First of all, around 52% of the capitalized assets are vehicles, and they are way more than plants and machinery. Why is this? Because mostly the company is trying to optimize its transportations and is trying to optimize its channelization, which is extremely essential for the company's perspective as it is trying to gain a greater market share, and transportation is a really essential unit of it. Now, the sales of the company has increased by 32% in FY22, but the expenses of freight, packaging, forwarding, and laboratory expenses have decreased by 42 and 77%. Now, this is completely counterintuitive because how can the sales increase and the like packaging and expenses, how can the expenses itself decrease and the sales increase? Now, this is a quite a great flaw that has been noticed in the balance sheet of the company. Apart from that, we see that in FY22, promoter salary has increased by 100%. Now, both Atul Modi and Namrata Modi are the promoters of the company. So their increase in remuneration was around 100%. But the executive director of the company just sought an increase of 5% despite the median remuneration of the company being 20%. So this shows that there might be certain internal conflicts arising in the management of the company. Although this is not a confirmed news, but still there are possibilities that certain negativities might come out of this. So basically, this is a broad presentation about what the company is.
So, Ashutosh, very good presentation, especially the last slide. I think you have
And,
hit the nail over there. For me, I studied this company before, and I have a lot of doubts about the management.
hmm,
One question, which maybe you can also ponder upon it. And since I've also linked you to that value picker page, you could actually add these antithesis over there, because that's a community where we kind of understand about companies. And I think your perspective is very important over there.
Yes, sir, thank
One
you.
thing that I noted is the board. I feel that the board is quite inferior
Mm-hmm.
because, I mean, one person has expertise in chemical manufacturing. There are two doctors,
Mm-hmm.
dentists,
Mm-hmm.
nobody with experience in ceramics and all of these things, because ultimately these fillings are all ceramics,
Yeah, yeah.
right? So yeah, so those are like dental cements, and it would kind of curate together and fit over there. So that's kind of missing, right?
Mm-hmm. I also.
The board of director is very poor. The e-commerce angle, that I don't even understand, because ultimately these are bought by doctors and they don't buy from Amazon. I mean,
Mm-hmm.
usually if you talk to a dentist about this, I did a bit of scuttlebutt. In the scuttlebutt, what I found out was these 3M and these guys are more popular or more
Yeah.
trusted
Mm-hmm.
because they actually go to the doctors and give them free samples. And these doctors, I mean, the dental doctors, dentists, they don't want to take risk with Prevest. One of the key reason is uh, when anybody does a dental filling, it's generally nearby dentist. I mean, you don't go very far, so people know you. And there's a bit of word of mouth. And Prevest, because they don't have much background. They don't. They I mean, people have not worked with it and all, and they don't even supply these free samples. What happens is the doctors or the dentists are not ready to take that risk for that small profit. I mean, whatever
Mm-hmm.
profitability comes, right? Because their reputation might be at stake. What if
Mm-hmm.
this tooth enamel sort of becomes yellow after a few years, right? Those things they don't want.
Yeah, yeah. But
Yeah.
there has been reports that ensure that
Hmm.
these products that are manufactured by Prevest Denpro are
Hmm.
almost equivalent to 3M India. Like those are the reports that are published by the internal management itself. So we do not
Hmm.
know to what
Do
extent of
not know.
trust we should have.
Yeah, yeah. For this, it's always better to ask a dentist. They will know
Mhm.
about it, right? And also in the value picker thread, you'll see lots of people did a lot of scuttlebutt and they posted it. Like some people
Mhm.
said that's okay, some people said no, not of good quality, but there's a mixed response. And
Mhm.
the customer is basically the doctor over here. Okay.
Yeah.
Next is their inventory. So if you look at it, their inventory is also rising very high. Okay.
Mhm.
And as you said, I mean, compared to their sales, uh, as you said, their packaging and all of those things are not increasing, but their inventory is rising over very high. So I'm not
Mhm.
sure. Maybe Nirvan can tell if they are doing some accounting shenanigan. They're also not giving off dividends. And right now, what would you like for a small company, right? Like, say, for example, you're at 1% market or 2% market share, and you have a aim to become a 4% market share guy.
Mhm.
Where would you put your capital in? Would you put your capital in dental practices, or would you put it in some, hand sanitizers, hygiene products, which I don't think they would be of high operating margin. I mean, the gross margin would be not that great in that,
Yeah, like.
because
Mhm.
what's the USP in a hand sanitizer? Yeah,
Mhm.
please.
Yeah, like I was saying that
I,
they are doing this kind of shift in SKU because they have reported around 40% growth in gross margins. But I feel that they should penetrate one market deep enough so
hmm,
that they are the masters of the market instead of putting foods in two boards. So,
correct.
like they should invest in marketing, they should invest in dental practices, they should invest in improvising their products instead of building newer SKUs.
Correct. So I mean, with focus comes better. I mean, they'll need
Mhm.
to build up a relationship with the doctor. So I think the capital allocation is also very poor for them.
Yeah.
And also your comparison with
Mhm.
3M is, I would say, not very correct, because 3M over here does everything. I mean, they do all this car PPF and all. So it won't be an apple to apple comparison. It would be an
Mhm.
apple to jackfruit comparison, sort of.
Mhm.
They're a very lot different company. Yeah,
Mhm.
and also 3M doesn't manufacture these things; they import it. So that
Yeah,
way,
they import
we
from
have to
China.
differ. Correct, correct, correct. So yeah, I mean, overall, I mean, the way you presented it was perfect, and this is exactly what I was looking at. And
Mhm.
Nirvan, you can now take. Yeah, if you
Yeah,
please.
yeah. Thanks for the discussion, guys. Ashutosh, see, overall, the company has been growing well. Company has a great PE multiple. So actually, you compared the PE multiple with the industry PE multiple. So
Mhm.
that is something I think for screener, it's not very accurate because what they say as industry, etc., is not very clear to us. So you should probably, take an independent view on the PE. From my understanding, it's priced for growth. Yeah. So if the company is not going to grow very fast, then it's expensive on this PE, right?
Hmm.
So my question to you is, I haven't studied this company a lot, but I know a little bit about it only.
Hmm.
My question would be, what are the entry barriers? Like, why can't any other company tomorrow come in and replicate whatever they are trying to do? Like, where do they have a moat? Do they have a moat in materials? Like, are they material science experts? I don't think so. Do they have a moat in branding? Well, a lot of their sales are export sales. So, in export markets, I'm sure the brand doesn't work.
Hmm.
So, domestic market, they are selling how much? 20 crores of, no? I don't know whether brand is a moat. Is distribution a moat? Do they have large dealers, distributors? Are they present in every nook and corner dentist whenever they look to, buy products? Are they present there? So that is, or do they have access to some great uh, technology or cutting edge research mentorship? I also didn't get that feeling. Yeah, they have that tie up with that Kerala Dental Institute, but so, do you have any insights on this? Like, what are they doing which cannot be replicated? Why are they special?
Like, first of all, according to the management posts, they have said that they are providing a greater percentage or greater cut to the dentist compared to any other marketplace. And secondly, they have their own manufacturing unit in India. So I think having a dental manufacturing unit in India is one and only for this company. So these are broadly the 2 points which I feel
So,
can be unique.
Ashutosh, got it. So,
Hmm.
tomorrow, if another company wants to set up their manufacturing facility in India, then these guys would be in trouble.
Yeah, like, if another company does that, it will require a huge amount of initial investments. But if it is capable of doing that, they can easily replace this company.
I don't think it will require huge amounts of investment. If you look at their balance sheet, like you only said, most of their money is tied up in vehicles. Their fixed assets is 7 crores. They are
Hmm.
right now putting up a capex of 17 crores, but their fixed assets till last year, till March 2022, was
Hmm.
only 7 crores, Ashutosh. And that amount is peanuts, right?
Yeah, like I was talking, if a newer player comes, like establishing a new industry, if a pharmaceutical industry does that, then it is like a piece of a cake for it.
Hmm. Right. So you're saying because it's low cost based out of India. And what was the second reason you said?
Like, it does provide a greater cut and percentage to the dentists if they are trying to like channelize their products to the customers.
Okay, so you mean the landed cost to the dentist is lower compared to
Yeah, yeah. Hmm.
okay. And were you able to compare 3M's dental business margins with Prevest margins? Like, did you get any dental segment data for 3M which could be compared?
Like, no, I did not get any such dental specific data. But
Hmm.
according to the responses in the thread, I found that the 3M India's products were of a great quality and of much higher quality than Prevest Denpro, as reported by doctors. And there
Yeah.
are
So
certain
no, go
there are
ahead. Go ahead. Finish.
there are certain segments in India where Prevest Denpro has not even reached out to, and mostly 3M India is ruling the market right now.
Yeah, so Ashutosh, there's no doubt that 3M India's products will have more acceptance, more quality. Yeah, it's a global giant, right?
Hmm.
What I'm trying to understand is if one of the key strategies of Prevest is going to be higher discounting,
Hmm.
um, and coupled with low manufacturing cost base in India,
Hmm.
are their margins, comparable with 3M? I think that would be a very interesting study to understand because um, if, for example, the manufacturing cost is so low that even with discounts, um, their dental ROC or dental EBITDA margins are superior to 3M,
Hmm.
then okay, there is something to be said for the business. Yeah. So
Hmm.
maybe, later we can look at it. Actually, this is one of the companies that both Gaurav and I are seriously considering in the sense that we want to know more about this. And if it's interesting, we may even take a position. So
Hmm.
it's only these kind of companies that have been given out for analysis. So another thing is, did you understand how the process gets to market, like how the products get to market. Like, for example, for pharmaceutical products, there are medical representatives of the companies, right? The pharma
Hmm.
companies
Hmm.
who go and sell the products.
Hmm.
So they go to doctors. They don't exactly like sell it, but they go and try to influence the doctor, right?
Hmm.
Because the decision maker is the dentist in this case, I'm sure.
Hmm.
So how does that work in this industry? Any insights?
Yeah, like mostly in this sector as well, it works in a similar manner. Like Prevest Denpro or 3M India, they sell out medical representatives with products, sample products to the dentists, and if they validate and if they're satisfied with the amount of cut they're providing, with the quality of the product, the strength and durability of the product, they keep it with themselves. Otherwise, they reject it. And mostly, I think the marketing is not strong enough for this company because I think there is a great lack of reaching out by this company, and it has not reached out to a greater number of dentists in the market.
Yeah, so that was going to be my next question. Do they release any data of how many dentists are in their network and out of how many total dentists in India? Do they have they in their annual reports written anything about this?
No, mostly, I did not find any such statistics.
Okay. And in the new capex, apart from hand sanitizers and all,
Hmm.
are they planning to, first of all, currently, are they making dental implants or are they planning to expand into dental implants?
They are making dental implants.
They are making like those metal implants, the titanium, etc. implant. They make it.
Yeah, yeah.
Oh, okay, okay. And any commentary you read on value pickers specific to the quality of those implants, because that is one of the highest cost dental treatments that one can get and must be very high margin. So,
Like
any insights on the
I was
quality of implants?
I was not really aware of value picker thing before this, and I just got to know like 3 4 hours before this
Oh, okay,
presentation.
okay, okay, got it. Yeah, so maybe you can, take a look at leisure, and because I did not know that they made implants. So you saw it in their catalog. Implants are there.
Yeah, yeah. Implants are there.
Okay, okay,
So I
that's
searched in
interesting.
their annual report. I didn't find implants. I'll try to find more. Wait.
Yeah, or maybe Ashutosh just share the document with Gaurav, now where you
Uh,
saw that they're making implants. We'll take
Yeah.
a look at it.
Hmm. Okay.
And yeah, I think that's it. So good presentation, Ashutosh. I think this, especially the antithesis, not only antithesis, the last slide,
Hmm.
where can you go down to the last slide?
Yeah.
Yeah, this was really well done. Yeah, why do they have so much assets in vehicles? What are you saying? Like, is logistics a big part of their business?
Like I was saying that they are setting up a new manufacturing unit, so the amount of logistics required would be quite large. So maybe they are compensating the entire logistics in this quarter only.
नहीं यार, मतलब ये सब vehicles कोई खरीदता नहीं है. Like you take it on rent or lease. Like you don't put your own capital for buying vehicles. This vehicle thing is mentioned where, if I want to read up about it in the annual report, or
No, it's mentioned in the thread in value picker.
oh, in the value picker thread.
Hmm.
Okay. This is very weird. एक तो
Hmm.
इनका एसेट बेस ही 7 करोड़ का है, उसमें से तुम कह रहे हो 50% इज इनटू व्हीकल्स, which is completely a non-core asset. That
नहीं
is
मतलब
where.
50% इज नॉट इनटू व्हीकल्स, मतलब जैसे पिछले क्वार्टर से जितना राइज हुआ है उसका 50% है।
अच्छा, उसका 50%। हाँ, तो पिछले क्वार्टर से मतलब ओके, ठीक है, देखना पड़ेगा इसको।
हम्म।
And this is also a very valid observation that sales have increased, but expenses such as freight, packing, forwarding, and lab expenses have decreased.
हम्म।
So that doesn't make sense at all. Could you find anything on anywhere about this, like explanations for this or anything?
No, like again, this was mentioned in value picker, so I just picked up.
Hmm. Okay, okay. Hmm. Got it. Okay. Thanks, Ashutosh. I think this was
Okay,
quite a good presentation.
thank
Enjoyed it. Thank you.
yeah,
thank
yeah. I also enjoyed it. So, Ashutosh, wait 1 second. Before I do this, I stop the recording first. I actually recorded it without asking to you. I would have asked you before, but